Hi guys, welcome to this Money Control live stream. It's a Friday morning and not a pretty picture. If you look at our markets, we shed somewhere around 1% or thereabouts yesterday. But more importantly, we broke below that crucial level of 24,750 as well. And the Nifty, of course, perched at 2-month lows. And if the GIFT Nifty is anything to go by, we are poised for another day of triple-digit cuts. But of course, it was weekly expiry. There was a fair bit of volatility, but it was the auto pack that was the big culprit, that led to such a sharp sell-off in the markets. Of course, lots lined up over the next 30 to 35 minutes or so. We have important earnings to discuss, the likes of Infosys, Wipro, Axis Bank. These are some of the numbers that came in post-market hours. We'll try and take stock of all the earnings and what the brokerage verdict is. We'll also be, addressing all your stock-related queries. So if you have them, keep them, coming in on our live feed. We'll try and take them up. But of course, before we move any further, let's take a look at the top headlines at this hour. Time high, the Nasdaq also gains, but the S&P 500 ended the day in the red. Meanwhile, Asian markets opened mixed. Chinese GDP data also came in slightly above estimates. The GIFT Nifty, however, is suggesting a lower start for the Indian market. Gold prices hit record highs on geopolitical uncertainty and hopes of aggressive rate cuts by the US Federal Reserve. Crude, meanwhile, has snapped a 4-day losing streak, with Brent trading above that $74 a barrel mark. Infosys reports a good second quarter and upgrades FY25 revenue guidance. Wipro's numbers as well managed to beat expectations, but guidance for the third quarter fell short of expectations. Axis Bank, on the other hand, reported a mixed set of numbers, with loan growth coming in at a 12-quarter low. All right, on that note then, let's take a look at the cues for trade. As I mentioned at the start of the show, the Nifty at 2-month lows, whether or not we take out that 24,700 mark as well today is something we'll be, keeping an eye out for. In fact, the Nifty is very close to that October 7 low of 24,694. Perhaps that would be the important, support level to watch out for on the index. We'll touch base with our technical expert and pose this question to him as well. But it was a broad-based sell-off that came in yesterday. We've seen the Nifty break below key support levels. 41 out of 50 Nifty stocks ended the day in the red. The mid-cap index was also underperforming the benchmarks. 2% cut coming in for the mid-cap index. Autos, biggest drags yesterday, 3.6% kind of a cut coming in on the Nifty Auto Index. And of course, that was led by Bajaj Auto, that crashed 12% on the back of, cautious comments on the festive, demand and sales from the management of Bajaj Auto. That really took the entire auto pack, down with itself. Of course, aside of that, if you look at some of the other stocks in trade yesterday, Nestle reported numbers. Volume growth fell short of expectations, which is why we saw Nestle also, give up somewhere around 3% or thereabouts in yesterday's session. PCR, put call ratio for the Nifty rose to 0.88 vis-a-vis 0.74 in the previous session. Quite a few stocks in the F&O ban list as well. No new additions or deletions, but yesterday the kind of yesterday those stocks that were in the F&O ban will continue to be in the F&O ban today as well. The likes of Bandhan Bank, Chambal Fertilizer, Granules, GNFC, and the likes. All of the stocks that were in F&O ban yesterday will continue to be in the ban list today as well. Foreign investors, continue to sell out of Indian equities. 7,400 crore worth of stocks sold in the cash market. On the other hand, a lot of domestic money sloshing around in the market. So the DIIs continue to emerge as net buyers, bought shares worth nearly 5,000 crore rupees in the cash market. But of course, on that note, let's bring on board our technical guest for today. Joining me is Ajit Mishra, of Religare Broking. Ajit, great to have you on the show. Crucial support levels being broken. I mentioned 24,694, the October 7th low. Would that serve as an important support level on the index, or do you see lower levels?
Yeah, good morning, Nandita. So, yes, we are again back to the square, this kind of attempt of recovery that we were seeing from last almost 5-6 trading sessions. So finally, we are again, retesting that mark. The way the GIFT Nifty is indicating a negative start, I doubt that we are going to hold this level. And but on the closing basis, is going to be important where we close today, because obviously the market is going to react to the Infosys and Axis Bank number also in the early trade, and then tomorrow we have a couple of other big names like HDFC, Kotak Bank will be announcing their numbers. So banking, till yesterday it was among the leaders, means the sector which is trying to provide some support alongside with IT and pharma, but that also slipped sharply lower in yesterday's trade. So now, as per the setup, it seems like that 24 400 450 is something that we might head towards to, which is the 100 EMA placed on the daily chart for the index. So the setup looks negative and the bias is not going to change. In fact, the resistance that we had earlier close to around 25 300, that has shifted to around 25,050 to 25,200 zone. This is sell on rise market as long as we are not seeing a close above 25,200, and 24 400 450 is going to be the next major support to look at.
Okay, take note of the levels that Ajit just mentioned. 25 till the index closes above 25,200. It is largely a sell on rise market. But since you alluded to banking names, or three major banking names in focus in today's session. Of course, Axis Bank will be reacting to its numbers. Profits managed to beat estimates. Net interest income was below. Although asset quality, that was a cause of concern, saw some bit of an improvement, and loan growth, as I had mentioned at the start of the show, is at a 12-quarter low. But you have brokerages giving out buy calls here, 1380 kind of target from Nomura, and expectations were fairly muted. In light of that, the company has, or the bank has, reported good set of numbers. Also, they used the one-off tax gains to cushion provisions as well. So, going into earnings from HDFC Bank and Kotak Bank, among the three, which one would warrant a trade at the current juncture? Because looks like Axis Bank is in for a positive reaction to its numbers. But ahead of numbers, HDFC Bank, is that a trade, or would you prefer to play it safe and look at an Axis Bank? Because Axis Bank has also been a fair bit of an underperformer along with HDFC Bank.
Right. So, Nanda, from the trading perspective, I feel that Axis, since the suspense is over for us, so and please, we are trading closer to the critical support, which is placed around 1100 mark. So, in case if it manages to open above, let's say 1150 mark, then we can see some recovery in Axis. SDFC and Kotak, they are also trying to participate in the recent recovery, but with the continuous selling from the FIs, again we are seeing a similar kind of a downtake or a decline that is ensuing after the recent up move. So among all three, I feel that Axis looks comparatively better from the risk reward ratio, with 1100 being the stop, and upside 1220 1250 is the zone basically where we may see this recovery extend. So as of now, if somebody is looking for any fresh trade, then Axis Bank is a better candidate.
Okay, that's the view on banking. But from banking to IT, Infosys, delivered in terms of what was being expected. With respect to guidance upgrade, revenue growth has been best in class if you compare it with peers. Even Wipro, for that matter, managed to beat expectations. 6 quarters of revenue decline. After that, it has managed to hand in some bit of revenue growth as well. But guidance was a sore spot when it comes to Wipro. What would you do with an Infosys, given the fact that yesterday, ahead of earnings, we saw good traction, but today, going by what the ADR did overnight, and pre-open as well, I can see that Infosys is shedding somewhere around 3.5% to 4%. Would you book profits here and perhaps look at other sectors? What would you do with an Infosys?
So, Manta, in fact, among all the key sectors, it's only IT and pharma which are still showing some bit of resilience despite the negativity that we have seen in TCS post numbers. Infosys, I feel that until we break this 1850 mark, one should not hurry exiting your long. So, if you have let's say a positional view for a month or two, then you can maintain your longs with 1850 as a stop. If it's a very short term trade, then definitely below 1920 in case if it opens, you can reduce your positions. But still, I feel that IT is comparatively better than the other sectors. We may see some consolidation of profit taking, but indications of any serious decline seems unlikely at current juncture. So IT is kind of like a safe haven for the markets right now. So for Infosys also, I would recommend that until we break 1850, one can stay put.
Okay, that's the view on Infosys. Just want to point out, I was reading a report by Morgan Stanley on Infosys. They have an overweight call on the stock, and the target price is at 2150. They've said that there is some bit of possibility of some bit of correction in the near term, but any potential correction should be used as an opportunity to build positions. That's the call on Infosys. But I want to take stock of some of these gas stocks because they have been in focus. CNG transport allocation to some of these gas companies like IGL, MGL, they have all been reduced by 20% effective 16th of October, and the reduction in allocation is expected to impact profitability as well. All the companies are exploring rather options to source gas via domestically produced gas, also via linked benchmark linked long term gas contracts as well. So this has come as a setback, and we have some of the brokerages also pointing out that this will be a drain on earnings for some time, given the fact that these companies, these stocks rather, have been in focus. Yesterday they saw some bit of reaction, and today as well they are expected to see further sell off. Any particular stock that's catching your attention between Gujarat Gas, Mahanagar Gas or IGL, and any gas stocks that you would be keeping on your radar?
So yes, in fact, they have already seen decent correction, and now since they have opened further lower today, and we feel that closer to around 470, 480 mark, we have multiple supports in IGL. So that could be the area where we may again see some buying interest coming in. So I feel that the damage due to this news is already been done, and there is a possibility that we might see some consolidation followed by a rebound. So among all these names, IGL is a better candidate to look at, with 470 being the closing stop loss.
Okay, IGL a better candidate to watch out for. On that note, we are getting the first ticks and slipped below that 24,700 mark as well. We have taken out the October 7 low of 24,694 as well. It's almost a 100-point cut coming in on the index. Sensex as well below that 81,000 mark, further below that 81,000 mark, 350, 360 point kind of a cut. Bank Nifty weak, over 100-point cut there as well. But I just want to see which of the sectors is leading the losses today, because yesterday it was the auto pack that shed somewhere around 3.5%. Even the realty pack was down 4% or so. Today IT, that's emerging as one of the big laggards today. 1% cut coming in on the IT pack. Just want to see what really Infosys is doing at the current juncture. It is among the top Nifty laggards as was being expected. 2.5% lower for Infosys. But any sector that's managing to hold out? No. Maybe private bank, Nifty private bank index is higher by about 0.1%. But aside of that, if you look at the texture, clearly on the downside, all of the sectors are under selling pressure. Autos are extending losses, another 1% cut coming in there. Metals are down by 0.5% or thereabouts. Remember, China GDP data has come out, and it's slightly above estimates, but it isn't enough to provide any kind of support to the Nifty metal index, because so far the stimulus announcements that have come in from China have been underwhelming, and the metal pack has been fairly reactive to news flow from China. So today as well, even though the news is positive, no reaction coming in there, and it is moving in tandem with the texture of the market. Aside of that, if you look at some of the individual movers, then Axis Bank, 3.5% uptick here, mixed set of numbers, but some reprieve in terms of asset quality, although loan growth is at a 12-quarter low. Profits have been good, and some of the one-time tax gains have been used towards provision. So Aisha Motors is the other one that's doing well. Wipro, of course, as I mentioned, numbers were better than expected. There was a bonus announcement as well in the ratio of 1:1. But guidance came in as a bit of a disappointment. Sun Pharma, ICICI Bank and Bharti Airtel. So gainers are few and far between, just about 7 to 8 gainers on the Nifty. Otherwise, you have a lot of these names like Maruti, Bajaj Auto, all of them are extending losses. M&M as well, even BPCL, Adani Enterprises, all of these stocks under pressure. Looking at the open, we have broken below that 24,600 mark as well. What would you, or which stocks would you keep on your radar for today?
So Nandita, I would stick with the defensives like select stock from the pharma basket like Dr. Reddy's still holding strong. So we may see some consolidation around the current levels, but there's a possibility that we might see an uptick once we cross the 6,800 barrier in Dr. Reddy's. So that should be on your radar with 6,600 as a stop. At the same time, since the majority of the stocks are reeling under pressure, PSUs, Canara Bank, there's a fresh breakdown. The stock is down nearly 1%, and we may see another 5 to 10% kind of a cut in this stock. So one can look to go short through 105 as a stop. And then we have BHEL, which we have recommended to our clients also. The stock has witnessed a fresh breakdown below the long-term averages after this almost 1 month long consolidation. So here also we may see a dip nearly around 230-35 zone. So with stop at 260, one can go short in BHEL as well.
Okay, those are the recommendations. But let's talk about some of the stocks that are in focus. Zomato, that stock is down 4% or thereabouts. The company will be considering fundraising via QIP on the 22nd of October. The stock has done phenomenally well, but off late it has come under a bout of correction. But would you say that at these levels, it's a good opportunity to take a position here as a positional play? Would you look at Zomato now?
So yes, we can start accumulating around this zone with lower band around 245 to 50 zone. So within this range, 265 to 250, one can look to accumulate and maintain a closing stop loss at 240 for the entire position. In the next leg of rebound, it can probably test 275 to 80 area. So one should be patient and accumulate gradually.
Okay, accumulate Zomato, that's the call. But I want to pull up the charts of a Manappuram Finance. The RBI has banned one of its arms, Ashirwad Microfinance, along with Arohan Financial Services, DMI Finance and Navi Finserv from sanctioning and disbursing loans due to pricing concerns. Now, the business restrictions on these NBFCs apply with effect from 21st of October. Of course, we know that MFI sector has been under stress since the start of the fiscal year, and delinquencies have risen for most of the lenders, and this has been red flagged by the RBI as well. A 10% down tick coming in on Manappuram Finance. Of course, brokerages have downgraded the stock after this development. And if you look at what Morgan Stanley has to say is, it has downgraded the stock to equal weight. Target price has been cut to 170 rupees, which is still higher than where it's trading at the current juncture. But the RBI's embargo on the new business by Ashirwad could hurt profit for Manappuram going forward, and it could play out for a long time. It won't really go away, very soon. And they've cut the consolidated earnings forecast by 20% for FY25, and for FY26 to FY27, it has cut the earnings forecast by 30%. So that's the kind of impact brokerages are seeing on Manappuram. But they've also pointed out that the standalone valuation, however, remains cheap, but investor interest will take a longer time to return here. That's what Morgan Stanley has said. Jefferies, on the other hand, has downgraded the stock to hold. Target price has been cut to 167 rupees per share. Major breakdown on the charts. Are you witnessing that today? A 10% cut, Manappuram. How would you approach?
Yes, so Nandita, it's a very sharp cut, and now we are closer to the previous swing low, which is placed around this 150-55 zone. So if it breaks, then this pressure may extend. The stock might test 143, 144 levels before witnessing any sign of respite or reversal. As of now, one should be like cautious. One should not, jump into a trade. Wait the stock to some sign of reversal or a rebound consolidation before making any fresh trade. For existing position, 155 should be your stop.
Okay, that's the view 165. That is an important stop loss to watch out for on Manappuram Finance. But let's take up some viewer queries then on that note. The first one is coming in from Nilesh Jain. He wants to know your thoughts on Crompton. Crompton CG Consumer down 1.5% or so. The stock has been witnessing selling pressure. If you look at the 1 month chart, even the last 5 sessions, although 6 month returns have been fairly decent in the range of 40% or thereabouts. 409, that's the level it's trading at the current juncture. On the downside, what kind of level should one work with, and should one average out if they're holding it?
So I feel that one should refrain from adding to your existing longs, especially if you are in losses. But if you have looking for a fresh entry, then closure to around this level, close to around 400 mark, is something that one can look to buy fresh. With obviously considering that we are seeing market correction and mid cap and small cap, they were outperforming so far. So we may see further downside also. So with strict stop at 385, one can look to go long around the 400 mark for any rebound towards 425, 440 area.
Okay, that's the view on Crompton. Hope that answers your query. But Naveen has written in. He has queries on some auto stocks. Of course, we've seen a major correction on Bajaj Auto. Even Tata Motors has been falling. Autos, within the auto pack, would you look at this, as a buying opportunity, or would you say it's a good time to rotate out of some of these auto stocks and look at other sectors?
So auto, Nanta, we have already seen decent correction in some of these names, especially Bajaj Auto after yesterday's sharp cut. So closer to around 9900, 9450, 9500. This selling might subside. So if somebody is looking for long-term investment, that's the area basically where one can look at. And then comes Maruti. Basically, here also we are seeing marginal retracement from the record highs. So again, closer to 11,700, 750 zone is something where one can look to accumulate fresh. Among all these names, TVS is still holding strong. It's hardly retraced from its record highs, still holding about 2600 mark. So if somebody is looking for any short-term trade, then TVS should be the preference.
Okay, I hope that answers your query. TVS looking good, if you are looking at a short trade. But let's talk about NBCC. There's a query coming in on this stock from Sudhir Poddar. He wants to buy NBCC at current levels. But, is this a good entry point? That's the question. The stock has been fairly sideways. If you look at the last 3 month returns, 1 month as well, it has, corrected fairly, quite a bit actually, 9%. Would you look at this, or would you advise the buy here?
So I would rather suggest him to wait and let this stock stabilize above 115, reclaim that level and close. Because as you rightly mentioned, we have not seen any major correction in the stock yet. But now we are seeing a bit of an indication that there could be further, decline or consolidation or profit taking, which might result in the stock to retrace toward 95, 96 area. As of now, it's an avoid. Either one should wait for a breakout above 115 or a dip towards 96, not in between.
Okay, that's the view. I hope that answers your query. The next query that I spotted on our feed was on a Union Bank. Narayanan Ramchandran wants to know whether he should hold or sell. He has purchased at 149 rupees per share. Of course, the stock has come down quite a bit from there. Would you advise him to book losses here, or how should he approach? Because it is below his buy price as well.
True, and see PSUs, barring SBI, all the banking names, they are still struggling. So SBI is definitely for performing exceptionally well. So one way to look at it is that one can switch from Union to SBI or maintain a stop at 105 as a closing stop. We are almost very close to that mark also, and we have multiple supports around that area. So that might result in some consolidation followed by recovery towards 120-25 zone. In that case, also one should look to exit on bounce. So in PSU banking space, only SBI is something that one can consider. Rest one should look to accumulate, the private banking measures some correction.
Okay, and that's the view then on the PSU banking space, and also your query on Union Bank. Hope that answers your query. But a few more queries to go then. One query coming in on the railway pack. Anunay wants to know your thoughts on Titagarh. He's stuck with losses in this counter and wants to know if there's any scope in the near term to see a recovery, or he wants to know whether he should look at booking losses at the current juncture. Railway stocks, of course, have cooled off quite a bit, right? And they have been chugging along, so to say. But if for somebody who's stuck with some bit of loss here, how should one navigate?
Yes, in fact, that's the story for majority of the defense, railways, and other PSUs as well. And since they are already down roughly around 40-45% from their record highs, still we are seeing pressure emerging on every uptick. So similarly, there was an attempt of recovery in Titagarh also. The stock tried to reclaim its long-term averages placed around 1200 mark. But it couldn't sustain in yesterday's trade, and again we are seeing profit taking. So, but yes, I feel that there's a possibility that the pressure might subside. After this decline, there could be some consolidation. So, if you are okay holding the stock, let's say for 1-2 months, one can maintain the stop loss at 1000 levels and maintain your longs. Gradually it can extend this recovery towards 1350 1400 area. So around that area one can look to reduce your position.
Okay, that's the view. I hope this answers your query. Next one's coming in from Shomili Ghosh. She wants to know your thoughts on a Ratan India Power which she purchased at 17 rupees 58 paise. Being a bit of a loss here, the stock is trading under 15 rupees right now. Although it has given great returns, on a YTD basis and 6-month basis, but it has cooled off significantly. And given the fact that she is making a loss here, what should she do with her position?
So I would recommend maintaining a strict stop at 14 for our existing longs, because here also we are seeing gradual drift, but it's comparatively better. Means in terms of price action and volume. So as of now, still there is a possibility that it might make an attempt of recovery. So until we break 14 mark, she can maintain the longs. In the next leg, 17, which is a buying price, could be the area where it might resist first. And if it breaks, then 21 can something is also that it can test.
Okay, that's the view on Ratan Power. Hope that answers your query. The next query is coming in on the fertilizer pack from BU Dipankar. He wants to know your thoughts on what he should be doing what he should be doing with the stock, given the fact that he wants to know if it will hold that 114 level or will it fall further. Right now, I want to see what National Fertilizer is really doing. Don't really have the chart open. How is the entire fertilizer pack stacked up at the current juncture? Deepak Fertilizer, National Fertilizer. If somebody has positions here, it's a fairly volatile pack, right? How should they navigate?
Certainly. So, see, among all these names, I feel Deepak Fertilizer is still comparatively better. The stock is still holding around its record highs, though it's also seeing some consolidation and profit taking at the higher end. But there is a marginal retracement from the record highs in comparison to what we have seen in the other fertilizer name like RCF, NFL. So if somebody is holding NFL, we are trading at a very critical juncture, the long-term support zone. So if it breaks, let's say 113, then this pressure may extend and the stock might inch toward 105 or maybe lower. So that should be the stop loss, strict stop loss if you have any existing position. And for fresh buying, one should look to accumulate Deepak fertilizer, with the 1 month, 2 month kind of a time horizon in the next 5 to 10% kind of a down move and hold the long. So among all these names, Deepak fertilizer looks strongest.
Okay, that's the view. And I think for National Fertilizer also, he mentioned 105 rupees as a stop loss. So I hope that answers your query. The next query is coming in from Hemant. He wants your thoughts on Ujjivan Small Finance Bank. He has some holdings here. He holds 4,350 shares at an average price of 47 rupees. He's seeing a 20% loss, he's saying. And he wants to know what he should be doing. If you look at all the charts, over time periods of 1 month, 6 months, YTD, stock hasn't really been, hasn't been able to make any kind of recovery. 20% loss. How or what should he do?
So Nandita, yes, there were attempts of a bounce, a couple of times in the recent months, but it couldn't sustain. And now we are at a very major support area, which is the long-term, averages on the weekly charts. So close to around 37 is something that you should maintain a stop, because in case if it fails to hold that, then it's set for 32 or maybe lower. So he should restrict the damage, and in case if it fails to hold 37, he should exit. In case if it sees any bounce also, so close to around 44, 45 zone also, he should look to exit, because largely it's likely to remain in the range with bias on the negative side.
Okay, that's the view on an Ujjivan Small Finance Bank. Then the next one is coming in from Kartikeya Singh. He wants to know your thoughts on a Supriya Life Science, and he wants to know if it can be added at current levels. Last 5 sessions, it has been in a downtrend. Would you advise a buy on this particular stock?
So comparatively, it's still holding strong, but volumes are almost negligible. So for very short-term trades, one should refrain from buying such counters, because in case if the market corrects, and especially the mid cap and small cap, the pressure we see in low liquid counters are largely immense. So for a time being now, one should refrain from making any fresh bets. But if you have any existing position, 525 should be a strict stop loss. Once we close above, let's say 580, 85 mark, then there's a possibility that the stock might inch toward the previous record high, which is around 650 area.
Okay, that's the view on Supriya Life. But with that, I think we've come to the end of the query segment. Ajit, I would like to thank you for taking out time and joining in and sharing your thoughts with us this morning, and of course, helping our viewers as well navigate with all their stock holdings. Look forward to connecting with you again.
Thank you. Thank you.
Well, with that, let's just take a look at what the markets are doing at the current juncture. The Nifty Bank Index, the Bank Nifty, in fact, has managed to recoup most of the opening losses, and it has just about reversed course and managed to come back into the green. Very flat at the current juncture, but off opening lows nonetheless. Sensex Nifty off opening lows, but it is still a triple digit cut on the Nifty. 24,600, we managed to come back above that level. But on that note, let me get on board our next guest for today. Joining me is Anshul Saigal, a market expert. Anshul, great to have you on the show. Let me start by asking you a question on the auto pack. That was the biggest culprit yesterday, and that kind of stoked this sell-off that we are witnessing in the market. I want to ask you, the kind of commentary coming in from Bajaj Auto on festive demand. Do you think it's a structural demand issue, or is it just a cyclical downturn? And, with respect to investment in this sector, would you advise investors to look at a sector which is at best growing at 5% at a time when the GDP is growing at 7%? I mean, how would you really look at the entire auto space now?
Good morning, Nandita. Pleasure to be with you. Yeah, so this is an interesting space where in the last 1.5 odd years, many of these stocks have gone up as much as 3 times. And these are not small cap names, these are all large cap names which have delivered tremendous returns in the last 1 to 1.5 years. And prior to that, this space was witnessing a tepid demand uptick, which changed in this period. And as a result, the stocks have done so well. Now, after seeing such of the upsides being priced into stock prices today, it's very difficult to say that similar returns will be sort of repeated in the years ahead or even in the near term, say the next 6 months to a year. As a result, markets also feel the same and they have corrected, the stocks have corrected as a result. And I think that it would be, like you rightly said, a sector which is growing at say 5 to 7%. Would it make sense to be looking at a space like that, which has done so well in the recent past in terms of stock prices? Or one should look at alternate spaces where a similar sort of trend in earnings growth is likely to be witnessed and where stocks haven't done so well. I think that the latter space is what one should be looking at, where stocks have been kind of tepid, where earnings are picking up. And I would say that in the rural space, there are multiple such opportunities where one could look at rural economy picking up, as a result, demand going up, and stocks have done nothing over the last 2 to 3 years. Even in this rally, stocks haven't done much in that space. I think that that is where one should be focusing on rather than looking at pockets where markets have done exceptionally well.
Okay, so for those invested in the auto space, would you ask them to, book out? Is that the right strategy now?
In general, my strategy when stocks have done so well is to keep shaving these stocks, keep bringing your position size to a more reasonable number. I'm assuming that someone who bought, say, a Bajaj Auto 2 years back would be sitting on handsome gains because the stock is, as I said earlier, tripled. After seeing such a rally, it would only be prudent to take some money off the table, not just in this particular name, but in general in stocks, and keep shaving those names. That's a prudent strategy, and I would recommend that to all your viewers.
Right, and let's shift focus to the earnings season. Then we've seen all the big IT names reporting numbers. So far it has been fairly okay, barring TCS, which handed in a margin disappointment. In terms of Infosys, the guidance revision was on tap. Largely in line with expectations. Even Wipro, for that matter, handed in better than expected numbers, although guidance was a bit of a disappointment. But in terms of stock performance, we've already seen mid-cap names do extremely well. And, if you look at Emphasis, the commentary from the management was also fairly upbeat. So here on, do you still see, large cap IT taking some more time to recover? And in that sense, do you see a big divergence between mid and large cap IT names going forward as well?
Yeah, that's a very pertinent question, Nandita. Actually, if you look at the history of this space, I remember prior to COVID, IT stocks used to trade at between 15 and 20 times price to earnings, 1 year forward. And if a stock was on the higher end of that range, it was believed that this stock is expensive. COVID happened, things turned for this sector, demand patterns changed materially, tailwinds came in for demand, and so also valuations changed for the space. If you look at the large cap names today, this they trade somewhere in the region of 30 times, 25 to 30 times price to earnings. And some of the mid caps trade even higher than that, 35 to 40 times. Of course, demand patterns have been strong. Tailwinds in growth have been quite robust over the last 3 4 years, with the exception of that 1 year 2022. But at these valuations, if stocks are growing at say at best 10 to 12%, then really there isn't much room for a re-rating further from here. At best, you can expect a compounding at the rate of earnings growth. So if you're happy with a 10 to 12% compounding in these names, then clearly this is the large cap IT space may not be a bad space to be in. Also, if you're anticipating a correction in the markets, then this is a sort of a defensive space where downsides will be limited. And as a result, this space may not be a bad space to hide in. But if you're someone who's looking to double your money in 3 years, then clearly this is not the pocket for you. And so looking at these stocks from this vantage point will give you a better picture of how to buy, invest, or trade in these names.
Let me ask you a question about the entire capital market theme, right? Look at exchange stocks; they have done phenomenally well. AMC stocks have been doing well. Of course, there's been increased participation in the capital markets, but on the other hand, there's been the new FNO rules that SEBI has announced. Jeffries had recently downgraded BSE as well, saying that Street is being overly optimistic when it comes to market share gain expectations for BSE in particular. So, if you come to the entire capital market theme, how should one really play this theme through AMCs or through some of these exchange stocks or even depositories for that matter?
Um, we are talking about the capital markets theme today, but I can tell you that the market has been hot on this theme for the last 4 to 5 years. Of course, there are various sub segments within the capital markets theme. One, of course, is the exchanges, the other, the asset managers, the third is the platform providers for the capital markets. Names like that. They're all in quite quite in favor of the markets, and markets have been looking at these names and buying into these names, re-rating these names over the last 3 to 4 years. Of course, they've had cycles. For instance, the AMC stocks had a cycle of the expense ratios expected to go up, and as a result, the stocks came down. From there, that disappointment is out, and the stocks have regained their previous valuations and gone even higher. So those kind of cycles have played out. But by and large, if you look at this space and you compare it from pre-COVID levels, you will notice that the space has again been re-rated materially. Stocks which used to trade at say 20 times price to earnings trade at 60, 70 times price to earnings in certain instances. And when that happens, even the name that you took, Bombay Stock Exchange, that stock has gone up, I don't know how many, 7, 8 times in this period. Now, when you've seen such rallies and the meat of the returns are behind you, I am not one to chase expectations going up further. Many times that's a fool strategy because you're looking for a greater fool to come in and buy at even greater prices. I don't want to be in that game at all. The market gives us so the beauty of the markets, in fact, is that at any given point in time there is some pocket of the market which is consolidating. There is another pocket which is actually rising, another sector which is rising. If we go back even to 2022, IT sector in that year was really the most followed and most wanted sector. But 2022 was a really bad year for IT space because everybody had raised expectations in this sector by so much. I see that playing out in the capital markets theme today. Expectations are raised quite meaningfully. From here, getting the kind of returns that we've seen over the last 2, 3 years is not going to be easy. It's better to be on the sidelines, or if at all you want to be invested here, put only small amounts of money, not substantial capital at these prices.
Okay, a point taken. But if I ask you for three ideas for 2025, which ones would you name in terms of sectors
Um, Yeah.
and themes?
So in sectors, I think that the rural economy is at the cusp of a turn. Incomes in the rural space had been very weak as a result of COVID. What happened is most rural households had dug into their household savings to go out and manage daily affairs, and their household savings were depleted. They filled up those household savings, and we are at a time where they will now, in all likelihood, go out and spend. Rural tier 2, tier 3 cities, we should see a demand uptick in that space going forward. Segments that play into that sort of demand, whether it is discretionary spends, whether it is white goods, whether it is even apparel, I think that those segments are likely to see tailwinds going forward. And if you look at that pocket, Nandita, you will notice that many of the names in that pocket have really not done well. The stocks haven't done well in a tearing, general bull market. And as a result, valuations seem reasonable there. I think that that is a space which will be very attractive going forward. I think banking and finance has not got its due. There are substantial questions regarding the CD ratio, the banks not being able to raise as much deposit as credit. Those issues will progressively get resolved in our judgment, or at least those are priced in at these prices. And we anticipate growth to be quite strong in the banking and finance space. I think that that is a space which looks attractive on a risk reward basis. Third, I'm while capital goods companies have and manufacturing companies have seen a tremendous rally over the last 3-4 years, but if you dig deep, I know one thing for sure, that after a 10-year to 12-year hiatus, this is a space which will see tailwinds in demand over the next decade, and we are only in the first few years of that demand being addressed. And as a result, the runway for growth in the capital goods and manufacturing space is just too large. And as if you're looking for pockets where growth is going to be substantial in the next decade, and this is one pocket. If you dig deep, you'll find quality names which are actually reasonably priced, despite a tearing rally in this space. So these are three pockets where I would look for opportunity, and I find opportunity at this time.
All right, three themes being pointed out by Anshul. With that, Anshul, I'm afraid we are out of time. Would like to thank you for taking out time. I've had a few more questions, but I don't have the liberty to ask them due to paucity of time. But I wish to do that next time we interact. Thanks a lot and have a great day.
It is it is my pleasure. Wish you the same, and wish you a happy Diwali in advance. Bye.
Thank you. Wish you the same, Anshul.
Thank you. Thank you.
Well, with that, I just want to point out we've staged a very good recovery from the day's low. It's almost 100 point or almost 100 point recovery from the day's low. In fact, we have come back near that 24,700 mark, 24,694. That was the October 7 low. We are around that level now. So it's a good recovery from opening lows. Let's see whether or not we can build on this and manage to edge back into the green, because the Nifty Bank Index has done just that. The Nifty Bank Index is up somewhere around 0.3% as we speak, 51,500. It's hovering around that level. A lot of these stocks have also edged back into the green after witnessing a weak open. Wipro is now the top Nifty gainer. It's up almost 5%. Axis Bank, that's providing support to the Nifty Bank Index, up 4% on Axis Bank. So yes, all in all, we are off day's low. Let's see whether or not as the day progresses, we manage to edge back into the green as well as buying emerges at lower levels. But with that, we are totally timed out on this edition of Opening Bell. Thanks a lot for tuning in. Have a great day, and of course, come back and join us for Closing Bell at 3:30 p.m. Goodbye.